please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So just checking the levels, SGX Nifty is still looking down about 127 odd points. That's the picture for you. Well, back home, just to rewind yesterday's session on the Dalal Street, market failed to sustain any gains. The Nifty broke the 10,200 mark intraday, corrected down from that level and barely managed to hold on to the 10,100 mark. The Sensex saw cuts of about 0.5%. The index managed to end above the 33,000 level. Banks saw wild swings. The bank index ended with losses of about 0.5%. Midcaps underperformed and that index saw cuts of about 1%. So that was yesterday's trading action. Let's get in Rima now with a heads up on what to expect today. It's already a roller coaster, Rima. Good morning.
Hi, good morning. Yes, you can expect a bloodbath, across the global markets. You saw that in the US markets. It spilled over to the Asian markets, and the SGX Nifty suggesting that level of 10,000 perhaps might be breached. So clearly, it's the trade war fears which have gripped all global markets. As of now, the wise opinion which has come through indicates that the first shot impact may not be significant. However, if it escalates into a full-blown potential trade war, then the impact is going to be a lot more. But right now, the investor sentiment has clearly been hit. So JP Morgan says the current tariffs appear to imply relatively minor macroeconomic consequences absent of further escalation. CLSA's Eric Fishwick says, don't panic. Tariffs of 50 billion on products from the US to China don't reduce imports from China to the US by $50 billion. According to them, Chinese imports into the US will only reduce by about $6 billion, which will compare with Chinese exports of 2280 million. That's $2.2 billion. So 6 million compared to 2.2 billion, that gives you a sense that currently the impact is going to be minor. China has also fired back with a reciprocal tariffs, but only on $3 billion of US products, which indicates, according to CLSA, that China wants the trade conflict to be contained, at least for now. But apart from this trade war, as you guys have also been pointing out, it's the US government personnel shakeup, which is also added to the woes. The National Security Advisor has been replaced. And back to our own Indian markets, with all this, global worries plaguing us, we could expect a weak start. The Nifty has been failing to sustain that 200-day moving average. The market momentum is clearly down. Support for the markets will be seen around the 9,700 mark. The key reason being because the Nifty had bottomed out at these levels in September and October of last year, and it had also made a top at that level in June. So last year it was a fairly significant level, so that's going to be critical to watch. Yesterday, the FIs and DIs were buyers in the cash market, but that picture could completely change today.
Absolutely, Rima. With the caveat that most of the stocks will be in the red today, as the opening indicates, what are the stocks you're watching out for?
Well, let me tell you the stocks in news rather than the stock movers then. IT stocks, because Accenture came out with their Q2 FY18 numbers. Numbers look good. The revenue growth at 10% on a year-on-year basis in constant currency was at the upper end was higher than the upper end of the company's guidance. They've also revised their guidance higher to 7 to 9% for the full year. Idea has announced a leadership for the Idea Vodafone combined. The CEO will be Balesh Sharma. The CFO will be the current CFO of Idea Cellular, Akshay Mundra. How the market is reading it is that now that they've announced the leadership for the combined entity, it's very likely that the entire merger will get closed very soon. They just need the DOT approval, so that could be coming in a few days, which is why they've gone ahead and announced the leadership. IGL has announced a reduction in the CNG prices in Uttar Pradesh. United Spirits will be considering a stock split on the 13th of April. JSW Energy has secured PPA for 200 megawatts of plant. L&T Technology has signed a multi-million-dollar order from a German company. M&M, that's Mahindra & Mahindra, has signed an MOU with Ford to develop certain mid-size compact SUVs, electric vehicles. MEP Infra is looking to raise some money. They've approved the issue of QIP, floor price to be decided on the 27th of this month. Mercator board meeting also on the 27th of this month for raising funds via bonds, debt or QIP. So these will be a few stocks on our radar.
All right. Thanks, Rima, very much running us past that list. We have to take a quick break on that note. But of course, all the market action continues, and we will get you more global opinion on the overnight developments, both with respect to the US tariffs and China's response.
Let's just take a look at the Asian markets. While they are continuing to be under a severe amount of pressure, we're getting early rates come by from Hang Seng, and that one's down over 885 points, so a cut of close to around 900 points seen there. The Nikkei down 800 points. The Shanghai index as well down 3% as we speak. What does that mean for the SGX Nifty? Well, for starters, indicates a start around that 10,000 mark, briefly dipped below that as well. So let's get in some more opinion and perspective on what the trade war means for the markets in the world. Louis Alexander of Nomura joins in now. Thanks a lot, Louis, for joining in. Good morning. If you could tell us how much volatility would this cause to the equity markets, given we saw a sharp correction yesterday? We saw the VIX spike, the CBOE VIX spike, and there is collateral damage across the global indices. Where does it stop?
Look, I think we've got to find out exactly, number one, what ultimately the Trump administration does. I would point out the fact that for their initial action on steel and aluminum, there were a lot of exemptions. The announcement today vis-a-vis China, first of all, we're not going to know the products for 15 days. Second of all, there will be an appeals process. There will be an opportunity to negotiate between the U.S. and China. So we don't really know yet exactly how bad this is going to be. The second question, of course, is what is going to be the retaliation? What is the response of other countries? And is that process going to spiral out of control? Look, there's no question this is risky. But in many ways, Trump, his bark has been worse than his bite. And we've seen that again in the announcement today.
Louis, morning. Thanks so much for taking this call. I think it's evening your time there. So there's some amount of retaliation that's already happened. I mean, we've heard those announcements on import of U.S. pork, wine, some steel. So some of that is already happening from China. Are you expecting escalation? I mean, one of the views that we just got said that China should be a little pragmatic. But do you expect them to be so?
So I think what we've seen from China and from other U.S. trading partners is a desire in the first instance to be proportional, so that they are going to, in some sense, respond with something that's of comparable magnitude to whatever the U.S. does. I think if it ends there, this isn't an overwhelming issue. So, for example, on China, they're imposing a 25% tariff on a set of products that's $50 billion. That's about $12.5 billion tariffs, given that U.S. imports over $500 billion from China every year. That's not a big deal. If the retaliation is proportional to that, obviously that will have an effect on the U.S. As well. But if it holds at that, I don't think this is a disaster. But obviously there are a lot of ifs. And in many ways, what the Trump administration has done is crossed a bunch of lines that haven't been crossed before. And I think the risk to the global trading system is real.
Right, the risk is real in that case. What does one do as far as the equity markets are concerned? Because that's the economy, that's the market. The markets that are seeing some bit of collateral damage, are you going to be optimistic and go ahead and buy them, or stay away for a while?
Look, I think you have to see how this plays out. But I would come back to the fact that the global economy generally is in pretty good shape. We're enjoying a period of kind of synchronous global growth. I would argue in many ways the immediate risks for growth are to the upside, not to the downside. Yes, we are seeing monetary policy tighten in many countries, and that's going to have its effects. But I don't think people should be overly pessimistic here, unless this thing spirals out of control. And there's still, we need to see how this plays out in the coming weeks and months.
All right. Tricky times ahead. Thank you very much, Louis, for being with us on the show today. Well, on that note, let's say good morning to Anuj, who's also joining in on what seems like a bit of a freaky Friday, Anuj. I mean, all of these headlines, this kind of a fall on the Nifty. I mean, immediate first reactions you'd expect?
Yeah, I think the SGX Nifty is indicating, and I think the bulls would be happy if it's only restricted to what the SGX Nifty is indicating, right? I mean, if you look at Hang Seng, that's down about almost 3%. Rest of the markets, just a couple of points here. We are at 10,000. We are not at 11,000. So the bad news is hitting us. The market's already corrected 10% from the top. So that way, and if it's still a bull market, in that case, you have to consider this as a correction, and now we're completing a 10% correction. The problem for our market, Surabhi, and I think yesterday, the last hour told us that the market was getting prepared for this. Last hour's fall yesterday was led by IT. Now, from India's point of view, this whole trade war, the one thing that you have to ask is the next step going to be on Indian IT? That I think, because that for the bulls has been the last remaining sweet spot, that has been the leader for the market, and that becomes a bit of a problem point now. So that's something to watch out for. Yesterday, for example, the IT index ended at the low point. Today, I think 10,000, there should be some fight around 10,000, because if 10,000 goes, there's going to be a bit of mayhem. So in that case, 10,000 is important, and my sense is at least in the first hour, the bulls would make a defense of 10,000. And
so you're not expecting that to simply sort of the ground to give way immediately, as we start off?
The time to sell perhaps was 10,600 when the market gave you that opportunity, right? And when it was clear that it was a counter trend move. What may happen this morning for starters is that everyone is going to be on the short side. And then at that point, the smart bear who's been shorting this market from 10,600 might just decide to take some money off. That itself could lead the market a bit higher. It's not necessary it will play out like that, Surabhi. All I'm saying is that the Nifty has been consistently falling from 200-day moving average. There's this adage that, right, amateurs open the market, professionals close it. The last hour has been brutal for market. It's been falling from 200-day. The market is weak. It's going to 9,700. Absolutely no doubt about it. But it's not necessary that it goes there in linear manner. It may fall, then recover a bit, and then fall again. Today, the key would be to see if the first hour low is being respected. At some point, we will make an intraday low between 9 to 10. That becomes a crucial level. If that breaks, in that case, we're in for a trend day. Otherwise, there should be some fight around the 10,000, especially because our market has already underperformed a lot. It's not that, we are at 11,000. We are at 10,000. We have to, keep that in mind. The last hour selling is picking up in intensity. That is the problem. And the broader market is already at a level where the Nifty would be at 9,700, 9,800. There's been so much distribution in the mid-caps, while the index somehow was defending 10,100. So my sense is that we now might be going through the last bit of sell-off, and this process might just take out all the leverage positions, all the excesses. And if you're an investor who all through 2017, asked, where's my buying opportunity? Perhaps this is it. You'll never catch the bottom. But the fact is that, you make money in equity markets when you build portfolios in correction. That's when you create wealth. On the way up, of course, things look easy. And just one more point. You can be a bull and still, use futures and options to sort of hedge yourself or to create shorts. That is one point that I've been making for last many days now. So today is going to be a tricky day. But first thing, after 100-point gap down, do you want to short, especially with the Nifty so close to 10,000? That I think is a tricky call to take.
I guess the problem has been that every time the shorts cover, there are fresh bears who come out. And we're speaking about trend days, and the problem with this market, it's made a bit of a habit of having a trending day down, almost on a every day or every second day basis, right?
Yes, and when things become that simple, sometimes there's a reversal. Sometimes there is. So,
2 points. I want to know your perspective on that. The first thing you said, there are leverage positions which may get taken out. Are there that many leverage positions given the correction that we've seen in the broader markets? And secondly, the positioning. 41% longs by the FII, so there's still 60% short. How much more is remaining as far as the downside is concerned?
The only issue here is we're so close to expiry, and the expiry this time is on Wednesday, and momentum is with bears right now. So in that case, this 41% is going to work against the market, because obviously the shorts are playing for big now. I'm very clear in my mind that, and I have been for some time, that triggers would come. At some point, this market would test 9,700. All I'm saying is that after 3 or 4 back-to-back down days and already 100-point gap down, if you are shorting after that, in that case, you're running a risk of, even if the counter trend move only lasts for 70, 80, 100 points, that's enough to trigger your stop loss. So that's the limited point I'm making. But the market is weak, and decisively weak, especially in the mid-cap side. It's very weak. There are still leverage positions. I think there are still, look, the same point last year or a bit back, we were at 7,900 on the Nifty.
Right.
If you know the huge rally has just spoiled everything. From 7,900 till 10,000. If you had asked at 7,900 that in 1.5 years the market would be at 10,000, the bulls would have taken it. But because the rally was so huge and it went to 11,000, so many excesses were created. And right now the market is going through cleaning of those excesses. This is a trigger. This is not a reason. You know, our market was falling even before all of this was happening. So there's some incremental selling, but 10,000, I think there would be some fight around 10,000, because if that's not successful, then the way to 9,700 is really
so the short
very
point,
quick.
do not be cute and buy for a near-term pop, and maybe for a long-term.
You know, buying right now has to be for investors. For investors who have you know, longer horizon, they have to buy. Obviously, they're good quality stocks which they wanted to buy at 11,000. There's absolutely no reason why you should not buy now. But right now, respect the screen. The screen is telling you if you buy now, chances are you will see lower levels. If you're willing to take that, surely you can buy.
All right, fair point on that note. Let's take a short break, come back. We'll get you more market opinion. We'll get you individual news pieces as we return. Stay with us.
It's all about the US-China trade spat. We've been getting you lots of views on Power Breakfast. Here is one more. Let's take a look at what Jonathan Garner of Morgan Stanley has to say about these developments.
There is a sort of direction of travel here that is becoming quite obvious, and it is protectionist. And we identified a number of scenarios for this, in fact, well over a year ago. One of them was that it would just be purely rhetorical, and we've definitely moved beyond that to at least scenario 2, where you start to get actual trade protectionist actions. So we had solar and washing machine, we have steel and aluminium. Those weren't directly targeting China. So I think if these stories are true, that we move to this next level, that takes us, ratchets one further level higher. And then the third scenario, the really adverse one for markets, is where you start to get true kind of tit-for-tat protectionism, you know, on the European side, on the Chinese side. You know, Japan and Korea are also unhappy about some of what's going on here.
All right, so let's also get in some market opinion from for our own markets. Purinju Velia, the MD and portfolio manager at Equity Intelligence, important market voice, he spoke to us yesterday on the road ahead for the Indian markets, and here's what he had to say.
We have underperformed the markets in this quarter. There is something really affecting the market sentiment. You know, we had the first 3 quarters of the financial year, excellent, you know, returns, everybody made big money. And the last quarter, the 4th quarter, there is enough and more loss which can be booked. And then the tax liability of the first 3 quarters can be reduced.
Now, yesterday evening, we got some news with regards to the Idea-Voda merger. The old guard will make way for new blood once the $23 billion Vodafone Idea merger is completed. The companies have announced a new leadership team for this merged entity. Balish Sharma, who is now the Chief Operating Officer at Vodafone India, will become the CEO of the merged entity. Akshay Mundra, who is currently the CFO of Idea Cellular, will continue to look after the finances of the merged entity as well. And what's interesting is that the current CEOs of both Vodafone and Idea will move out of their offices and assume new responsibilities. Himanshu Kapania will become a member on the board of the merged entity, while Sunil Sood, who's currently the CEO of Vodafone India, will join the Vodafone Group AMAP leadership team and also help governance through board memberships.
All right, moving on, yet another alleged scam has been detected in the Indian banking sector. Union Bank of India has filed a complaint against promoters and directors of Hyderabad-based Totem Infrastructure. The bank has accused this company of siphoning off over 300 crore rupees. The consortium of 8 banks led by Union Bank had lent money to Totem Infra. The total exposure for this consortium is over 1,300 crore rupees. Okay, and on that note, let's just rewind back to the markets. By the way, there's some recovery in Asia. The Hong Kong Hang Seng is now down only 2.5%. It was down almost 3.5% at one point in time. So some little respite from all the bearishness. But Mangalam, futures and options. Anyway, what's yesterday's trade telling us?
I don't think yesterday's trade will be relevant
anymore,
right now. But the one thing that really stands out from the futures and options space, and that is something that I'll particularly be watching out, is for the 10,000 mark. The SGX Nifty indicating a start around that mark. Remember, this is, for all practical purposes, the expiry week. Has 59 lakh shares in open interest out there. Let's see whether that fight stays or not. But all that and more market action coming up on the other side of this short break, where Bazaar Morning Call comes up next. This is the end of Power Breakfast. Thank you for watching.